Funding in 2024 getting approved for those no doc and no PG products. That's what we're going to be talking about. So let's talk about it. So I wanted to break this down because 2024 is definitely when even the media is coming to light and letting people know that the economy isn't where it needs to be. And we are approaching that recession time, right? Excuse me. We're approaching to the point where they're actually admitting that we are in a recession. So, how are we going to navigate these funding arenas and getting approved for more no doc, more no PG opportunities throughout the year as interest rates drop, things of that nature, right? So let's talk about the landscape before we talk about how to start getting approved for more of these so that we can be in position and so that we know.
I don't want to have a conversation about nothing negative. I don't want to have a conversation about nobody who got something negative.
Sorry. So that we can start, making sure we're in position to get these products, right? So here's the landscape right now. We're in a recession. Okay. We've been in one, but more than likely they're really going to announce it and let people know what it is. And you can see this in the banking landscape. What's happening is that the banks are starting to restrict more, right? So they're more worried about how much debt they see on your profile. They're worried about if your lines of credit are being maxed out. They're worried about your debt to income ratio, and of course your frequency of payments, right? And how things are trending. Okay. So overall, as we look at the economy, we look at the growing debt. A lot of the debt, they can see that the debt is trending upwards, right? It's going further up, further up, further up. Now, as that happens, the banks are going to become more restrictive. And they do this. What's up, y'all? They do this in a lot of different ways. Okay. They may start requiring higher credit scores. So instead of it just being a 680, maybe now it's a 620. I'm sorry. Instead of it being a 680, maybe now you need to have a 720. They may want to see even more documents. So they may want to investigate your business a little more. Maybe they may want to see a longer standing relationship with them. So back in the day, especially in 2023, just a couple of years ago, it was easy to just hop online, open up a couple of tabs, and just go for it. Just apply for a bunch of credit cards and get those instant approvals like that because money was flowing. But now, with interest rates being higher and lending being more restrictive, the banks aren't giving out as many of those instant approvals. Okay. And the access to the no doc loans, no doc products, no PG products are being basically kept for their higher echelon clients, right? Bigger ticket clients, clients that's been with them longer, clients that have healthier, more consistent deposits into the bank account. Because as we know, the more money that we give to the bank, we're literally lending them money every time we make a deposit, the more money they can then turn around and lend out. Likewise, the more money that we put into the bank, the more money they'll lend to us as well, right? Because they see us as an asset to them. You see what I mean? So in prep, before we even get to just start applying for things, let's talk about building up that relationship. So the best thing you could do, of course, is have a relationship with the bank. When we're talking about going for funding, I always ask clients, even on onboarding calls, who do you currently bank with? Bank of America, Chase, a local credit union, a regional bank, that may be only in your neighborhood or something. Who do you bank with on the personal side? That's one of the best places to start because you already have that relationship with them, especially if you never overdrafted an account, you've never been late on any of your payments with them, and especially if you already have multiple products with them. So, like a checking account, a savings account, a auto loan, a car loan, or mortgage. The more accounts that you have with that bank that you're already doing business with, the more they're likely to lend to you. A lot of banks have internal scoring systems based on the amount of deposits that you do. 10,000 and up, you're going to get a better internal score and ranking with that bank. But they also score you internally based on the amount of products that you have with them. And of course, how long you've been with them. So the longer you've been with your bank, the more consistent you've been able to build that relationship in the form of deposits, in the form of different accounts that you open with them, the more likely they are to lend to you on the business side. Okay. Now, some banks, regardless if you've been with them a long time or not, they just may be more strict. Who comes to mind, of course, is Navy Federal. Everyone talks about them, but they are a very strict bank. They don't really have any, they don't have a lot of, like, let's say, products that don't check your credit. They don't have that. Like, everything you get from Navy Federal is going to be a hard pull. Everything. It don't really matter what you ask for. Depending on how you ask for a credit limit increase, even the credit limit increases are hard pulls, right? That's just the type of institution that they are. But in your case, with your particular bank, maybe this is a question you want to ask before. You want to ask them a question like, so what are, on the business side, what are some of your no doc programs? Or you wouldn't say necessarily call it a no doc program. Let's say it's an application only or a stated income application, right? Because the nice thing about business documents is that you can write down what you are projected to make in this year, because they call it a projection because you never really know exactly how much you're going to make as a business, right? You can see trends, things of that nature, but you can always project. Now in 2024, especially if you're newer to that bank and you don't have that history with that bank, they're going to do things like they're going to ask you for your business account bank statements from another bank. They may, if you're doing an online application, they may even ask you to connect your bank account through Plaid so that they can see your transactions digitally. Like, in some instances, this is something that even American Express will ask, depending on, your age, the type of bank or the type of card you're applying for, right? How old your business is. Even American Express may ask to connect directly to your bank account to verify that you have the income to substantiate the credit line that you're asking for, or so that they can better determine the type or the amount of credit that they want to give you. Okay. So build one of the best things you could do is build up that relationship. I would say build up that relationship for at least 3 months before you apply for anything. That's the best, absolute best thing you can do in funding right now in 2024. Build up that relationship, show consistent deposits. And consistent deposits will be about showing that you're depositing about $10,000 every single month. Now, when we're talking about $10,000 a month, here's a little secret. It doesn't mean you're depositing $10,000 in a lump sum. That can be $1,000 going there, 10 times a month. It could be $2,000 going in there 5 times a month. It can be all different denominations, right? But showing that you're having consistent cash flow of $10,000 a month puts you on a higher level. and gives you a higher grade with that bank. Some banks, when you go onto their website, this is just for you guys that really like to do your research, and this is something that I do too. Some banks actually have reward programs. Thanks. Some banks actually have reward programs or loyalty tiers based on how much you deposit. So, like Bank of America has one for business accounts. It goes from like bronze to platinum. The dope thing about this is at Bank of America, one of the perks is that you actually get lower interest rates as you tier up throughout their loyalty program. You get lower APRs and you get higher APYs. So your money market account, your savings account, you can get as much as 1.5% more. Even for my credit card enthusiasts, I see y'all on here. You even get higher cash back as you level up throughout their loyalty program. Sometimes I think it's as much as an additional 1.5% in the cash back that you earn. And Bank of America is not the only one that does that, right? Other banks have internal scoring systems. They may not tier it out the way or gamify it the way Bank of America does, but everyone knows that Navy has it, Chase has it. If you're in Maryland and you're a member of SECU, State Employee Credit Union, they also have one as well. And a lot of the banks would put this right on their website so you don't have to guess. It'll literally tell you 0 to 5,000, 5,000 to 10, 10,000, 250,000, right? So for instance, we're talking about this. Chase doesn't have it tiered out like that, but Chase highest tier is called private client. With a private client, or as a private client, that means they're holding at least $250,000 in your assets. As a private client, you basically can get access to just about anything you want through Chase, right? It's almost unlimited funding. And they waive a lot of the fees, or the bank fees, the cash deposit fees, application fees, like all types of fees are just waived for you because you're now a private client, right? So that is building out your foundation with the bank. Along with that, when we're talking about, let's transition to talking about these no docs. No doc programs is basically, and this is perfect for a startup, right? Your business isn't 2 years old. Maybe it's 3 months old. Maybe it's 6 months old. Maybe it's only a year old. All right. Maybe you don't have that cash flow just yet to show bank statements. This is where no docs come into place. And no doc products come in a variety of ways. You have no doc loans, which are fewer and far further in between. You have no doc lines of credit, right? Like no doc lines of credit. Like M&T had one, TD Bank. TD Bank had a no doc line of credit. And the other thing is you're going to need good personal credit to get access to these no doc products, right? Of course, your business itself needs to be in compliance. So we already know you want to avoid any of those high risk industries. So don't tell them you're doing credit repair. Don't tell them you're doing trucking. Even consulting right now is considered a high risk industry. So you may want to change that to something else, maybe like management, something to that effect, right? Don't tell them you're doing real estate, gambling, stocks, guns, porn. All of those are high risk. It makes it harder for you to get access to money, right? So those are going to be what they're looking for when we're talking about no docs. With no docs, they're going to have you do, they're going to soft pull you more than likely, or maybe a hard pull, and it's going to basically be a personal guarantee. So when we're talking about personal guarantees, that basically means if for whatever reason the business defaults, that product is going to show up on your personal credit report and you're going to get the ding for it, right? So, but the great thing about no docs is basically as long as you got good credit, you in there. And with no doc programs, depending on the bank, it can be as low as 25,000. It can go, some banks go as high as 100,000 before you need to supply any docs, right? So if you're looking at, let's say you wanted to do a no doc, 100,000 no docs, you can start off with Chase, basically the big banks, Chase, Amex, Bank of America. If you have a strong relationship with Bank of America, you can get no doc. I would not recommend, if you had going for a no doc product with Bank of America with absolutely no relationship, because they asked me for proof. Okay, a lot of the no doc programs are going to be, I mentioned this earlier, for those of us that already have a relationship with that bank. If you are just going in there willy nilly, asking for any and everything under the sun, they are probably going to want to see some kind of documentation from you. Bank statements, even recently, I've heard and gotten some data that some banks, even just for a credit card, want to see tax returns for a credit card, which is crazy. But if you don't have that relationship, you'll run into those type of situations, right? So build that 3 months before you go for the bag, right? And that's going to be your foundation with no docs. Now transitioning over, let's talk about no PG. That's the big thing too. Oh, I have, and this is great for, now no doc was if you're a startup, you have good credit, your business is new, you don't have a lot of cash flow, don't have like really anything to show the bank in order for them to give you money, the business is still basically on your back, on your shoulders. Now, let's say you've been in the game for a little bit and your business has, you have some business credit, but your personal credit isn't the best, right? You've been building, you've been working. So maybe you got some late payments, maybe there's a charge off in there somewhere, but your business is cash flowing. You can show banks, you can show 3 months of bank statements. Your business has some age, it's older than a year, it's older than 2 years. You can go for no PG. Now, with no PG, that's no personal guarantee, aka EIN only business credit. Now, there's a lot of people getting hemmed up chasing this no PG bag. Is not what you guys think. And I'm saying it so because there's a lot of people out here trying to scam you and be like, hey, pay me $1,200 and I'll get you, no PG funding. No PG funding, like no doc is based on your personal credit. No PG funding is based on your business credit. Business credit, just like personal, has to be built up. And to the point, it's going to take you a couple of months to build up your business credit so you can start going for no PG, aka EIN only credit, right? And it's broken down into tiers. So I'll give y'all tier one. If you don't have any business credit right now, absolutely none, and you've been thinking about how I'm going to get approved for this no PG stuff. First, of course, you need to make sure your business is set up in compliance, all 10 of the data points, right? If you don't know about what those data points are, just go ahead, click the link in my bio. There's a whole ebook that breaks that down. But once you have that, you're going to go to Dun & Bradstreet. You're going to get your DUNS number, all right? Your DUNS number is totally free. Don't pay for a DUNS number. You don't need to pay for it. So that's another scam to avoid. You don't need to pay for that. So you're going to build up these net 30 accounts. So here's the thing with no PG. It takes longer. It takes longer, right? And we're going to talk about timelines a little bit later after this. It takes longer than if you're doing no doc. So on your tier one accounts, tier one, that's just to get you a Paydex 80 score. Once you're at Paydex 80, cool, you can start applying for more things, right? Sam's Club, Home Depot, Lowe's, stuff like that. But to build out this first tier, you're going to get Granger, Uline, eCredible, there's Credit Strong, and then there's another one called Shirtsky or Shirtsty, SHIRTSY. Now, with these accounts, these are vendor accounts. You will have to pay money to build up business credit, right? It's not free the way you can build personal credit up for free. So you're gonna pay and sign up with these vendors. Okay, eCredible um, does utilities, so your light bill, your phone, all that good stuff can be paid through eCredible. They'll report it, right? Granger Uline is like office supplies. Shirtsky does custom shirts and things like that, branding, right? And Credit Strong, just like on the personal side, Credit Strong just allows you to pay into like a savings account and they report it to build up your credit report. Okay. So you'll have to spend at least $100 with each of these businesses. Some of them you have to pay, reoccurring, maybe a couple of months before it actually shows up on your business credit. Now, then you'll have a Paydex 80 score with these 5 tier 1 accounts. From there, you're going to go up to tier 2, which is more like store credit, then tier 3, like Amazon and stuff, and then tier 4, when we're talking about being able to go out, buy real estate solely on your EIN, purchasing your cars solely on EIN, right? That's the ultimate goal when it comes to the EIN. Now let's talk about timelines and some of the differences between no doc and no PG. So as you guys are thinking about, okay, how do I want to lay out my funding sequence, my funding process, let me see what I can do, how I want this to look. Now, no doc is based off of your personal credit. So as long as you got a 700 plus, you in there. You built up that relationship with the bank, depending on your deposits and how the type of relationship you built with your banker, they probably are already offering you products. They already are, oh, this just came in, this came down the pipeline. This is something you should look into, right? They're telling you about new opportunities as they become available, right? So you may already be tapped in with them like that. If not, throughout 2024, make it a goal, make it a habit to start building that type of relationship with them so you can stay tapped in and know what's coming in down the pipeline. Because on the back end, they're constantly changing, right? So timelines with no PG. No PG can be instant if we're talking about a credit card. It could be 30 days if you're talking about maybe a loan or even a line of credit, depending on the underwriter. Okay. But typically instant 1 to 30 days. That's generally the timeline, which is really good, especially if you're trying to get a deal done or make something shake, right? With no PG, which is solely based on your EIN, if your business credit is not already built out, you're going to want to dedicate 6 to 9 months just to build up that profile before you can go for those revolving lines of credit on the business side. That's why when we're talking about if you're a startup and you want funding and you don't want to borrow money you don't want to get any angel investors, you don't want to give up equity in your company, that's where no PG is going to come in, because you're able to access the funds basically immediately solely because you got good credit. Once we're talking about, and that will act as your foundation so you can continue to get lending, right? And as you get credit based on PG, you can be building up your business credit. So in 6 to 9 months, you can make the transition over to EIN only. And that's how you want to start looking at building out your credit. Because I know a lot of times what will happen, and I've spoken to a lot of business owners, is personal credit isn't in tip-top shape. So we're like, okay, let me go get this EIN only. But it takes 6 to 9 months to build that up properly so that you can use it to actually grow your business, right? So If you're interested actually in growing your business credit EIN only, so it's not solely focused on your personal credit, then definitely click the link in my bio. I do have an entire resource about building out your business credit from scratch, how to set it up, how to get a DUNS number, and I have over 20 vendors that you can use to build out your business credit. So it's going to take you from absolutely no business credit all the way up to tier 5 business credit, where you'll be able to buy real estate, do deals, and even purchase cars solely on your business with no impact to your personal credit. Right now, if you're interested in funding, you're having some ideas, you're not exactly sure where to go, where to start, definitely you can click the link in the description of this, or you can always click the link in my bio, and we can set up an appointment. Let's hop on a call. Let's talk about some of your funding needs and opportunities that you may have seen. And I'm happy to talk, and we can build out a strategy that's customized for you and your position. So let me know if you guys have any other questions. Definitely just hit me up, leave a comment, or shoot me a DM, and we could definitely chop it up. In the meantime, y'all stay warm, stay blessed, and I'll talk to y'all later. Safe travels. Peace.